America is going to be very, very upset the next few months. Jerome Powell said middle America is getting destroyed in America today. It's a very different economy. Inflation isn't moving.
It will hit $5 in less than a week.
Brace for impact. High gas prices around the corner for you. America is going to be very, very upset the next few months. Jerome Powell says Fed will wait to cut rates, and that is not good for a lot of people that were hoping to get rates being cut. Oil, direct Iran-Israel war could spike oil. Ready? $30 to $40, which means if you're paying in California right now $5.50 a gallon, you'll be soon at $8 a gallon if it goes up 50%. The U.S. freight recession keeps getting deeper. The average American doesn't know what a 401k is. The Federal Reserve will not be making rate cut.
12-month core PCE inflation, which is one of the most important things we look at, is estimated to have been little changed at 2.8%, and the 3- and 6-month measures of inflation are actually above that level. So we've said at the FOMC that we'll need greater confidence that inflation is moving sustainably toward 2% before it would be appropriate to ease policy.
What does that mean to the average person?
You can already see it at the gas pump because oil is 85. So the average person is like, well, I heard oil is 85. What that mean? It means the gas pump's going on. And thank goodness we're going into summer, not winter, because heating oil would be way up for people that are in the Northeast. If you bought a house maybe last year, squeezed into something at 7%, mortgage rates are still 7%. They're probably only heading back to 6 3/8 or 6.5 by the end of this year because they're talking about only cutting twice. It means the economy is not improving as much as the headlines say, that inflation is stubborn. It's still here. People are still seeing it up. And if you're thinking of buying a house and you think those interest rates are going to come crashing down this year, they're not. That's the loose translation.
Last year, a lot of people were speculating that rates are going to be lowered probably 4 to 6 times this year. And when I say a lot, I mean the heavyweights. I'm talking the guys that are the guys you go and read about, the Morgans, the Goldmans, the guys that are the experts, right? Okay, everybody's like, oh my God, it's going to go down. It's going to be great. It's going to be this. It's going to be that. And then all of a sudden, no. Another month, no, inflation's not dropping. Inflation went up 0.5 point. So now all of this is continuing the way it is to where we're at today.
When you look at all that, it's even a potential mild recession the second half of this year.
Mild recession, so they won't announce that obviously, but U.S. crude oil falls below $85 as traders discount Iran-Israel war at risk that we have. So direct Iran-Israel war could spike oil by $30 to $40. You know who says? Bank of America says. Through 2025 and Brent potentially reaching $130 and U.S. crude oil soaring to $123 if Iranian crude suppliers are disrupted by up to 1.5 million barrels per day. You have inflation, that's one thing. You have interest rates, that's one thing. You have unemployment, that's one thing. You have oil, gas prices, that's one thing.
All those first things you mentioned is like the flu. If oil moves like that, it's cancer on the economy.
Tell me why.
Because oil affects everything. Oil affects fuel, just transporting goods back and forth. And by the way, the U.S. consumer is so much in debt right now, we have a freight recession going on where the amount of freight being transported around is down. You have that. So if oil goes up, air travel goes up immediately. Energy costs, just basic energy costs for your car goes up. Plastics go up. Plastic starts in a barrel of oil. Freight goes up. Oil affects everything. It's like the bad domino to fall in an economy. And by the way, they're saying, oh, it's under 85. The peak a year ago was 93.95. So we're all the way back up within $8 of last year's peak where we were panicking and Joe Biden opened the Strategic Petroleum Reserve to take excess oil out there to kind of help the price. I mean, we're within shouting distance of this. The economy is not nearly as good as it seems. United States oil extraction need about a $60 a barrel to make a buck. 60, 65. The oil sands in North Dakota and Alberta, they need about $55. It's more expensive to get the oil out of the shale as opposed to just plugging a hole in the ground in the Gulf of Mexico or in West Texas. So United States is a very happy place if oil just sits right there at 60. So you think, well, 85 to 60 is not too much. That's 25% more. I mean, you think 25%, that's bad inflation. And if it hits on $100 or 120, that's exactly double. 65 is a happy place.
Should we expect any stability from any of this anytime soon? Or is it just like, get used to the chaos?
I think we need the Middle East to calm the F down. That will settle the oil market.
So check this out. This is the petroleum and other liquids. This is specifically oil, right? U.S. crude oil, early 70s to today. These companies need to make profit, right? This should give the average person a sense of what could happen. July 2022 gas prices in Americas. You're looking at $4.94, $4.99 peak. That's the national average, not California. $4.99 peak national average.
$5.
Yeah. So what is the national average right now? $3.64. Yep. So let's just say $4.99, $1.36 more. What's a $1.36 on $3.64? 37%. If this thing all of a sudden today goes from where it's at to $125 a barrel, gas prices national average will be $5.50. So gas prices could go to $7.50 in California for regular, not premium. It'd be $8 for premium if this thing gets $125. That's what you need to know. Some people, go on dates on Ubers. Can you imagine, like, now you have to cut down your 2 days to 1 day a week? Catastrophic for Ubers, the Lyfts, all these different kind of things that takes place. But that's what this means, basic math, what it could affect. And by the way, this is not just going to affect this Uber, food, everything's going to be going up. And this is the one thing that people will directly feel. This number they'll feel.
Let me translate even further. That means to fill your tank with gas, the average fill up I've read is 12.5 gallons. At that price, you're looking at $100.
The U.S. freight recession keeps getting deeper. J.P. Hunt, a leading freight company, experiences a significant decline in stock value following disappointing first quarter earnings, with profits plummeting by $70.3 million compared to the previous year and revenue dropping by $2.94 billion. Weak trucking volume and sluggish demands contribute to J.P. Hunt's struggle, reflecting broader challenges in the freight market. Demand remains weak. Pricing is remaining at really historic low levels. What's going on here?
I'll give you 3 data points. Our government is telling us the economy is fine. Consumers have $1.1 trillion in credit card debt. The economy is fine. Buy now, pay later. They're delinquent on buy now, pay later. The consumer is fine. So guess what? The consumer is not buying. Consumer purchases are dropping, and therefore there's a lack of demand for freight services to truck all that stuff around. Now you've got freight at historic lows. So what's happening to the income of those truck drivers? It's dropping. This is bad. So the freight recession is basically telling us that there's not demand to be transporting stuff around the United States. Let's translate that. Why isn't there demand? Because the consumer is more tapped out, but the economy is fine. And look at the jobs report. Oh, wait, those are a bunch of part-time jobs people are getting, because for every job that was on the job report, we lost 1.2 full-time jobs. The freight recession is you saying, I'm fine, I'm fine, I'm fine, and your mom puts a thermometer in your mouth and says, you have a fever of 103, you shouldn't go to school today.
By the way, transportation as an industry, we had one of our clients that we're consulting for, guys doing $40 million a year. He's down 70% due to not getting loads. And I said, why are you not getting loads? Then another guy jumps in who's part of this mastermind. He says, yeah, we're experiencing, whether it's on the load side where you receive loads to go, whether it's your own trucks. Right now, guys are selling their trucks because their trucks are not moving. The only way trucks make you money is when they're moving. If they're not moving, they're sitting there like, I don't even know why I'm making these payments. Here's a few things that you have to keep in mind. No matter what business you're in, you have to understand the ambition of your opponent and never downplay the ambition of your opponent. Okay, so guess what? Russia is ambitious. And what's their ambition? Leave us alone. We want to be a superpower. We want to be somebody that you cannot be messing around with. And we want the respect. Russia's got how many nuclear warheads? They got plenty of them. You can put the ranking and kind of see this. China. Yep. What's China's ambition? China's ambition is clear. They want to be the biggest superpower in the world.
Found this video insightful? Hit subscribe, turn the bell on, smash that thumbs up, and dive into the links in the description below. Join our vibrant community to ensure you never miss a video. Your generous support fuels our passion. Thank you for watching. We love you.